Vietnam, a strategic choice for high-tech investment capital. Vietnam is witnessing an unprecedented wave of investment in high-tech industries and innovations. In particular, artificial intelligence has become a focal point, attracting the attention of global strategic investors, especially the groundbreaking advances in generative AI. Section 1. Background and current status of Vietnam electronics industry. According to the data from 2015 to 2024, the manufacturing and processing sector has consistently led in attracting foreign direct investment, FDI, accounting for 50 to 80% of total registered capital. Numerous billion-dollar projects in electronics, semiconductors, renewable energy, and high technology have been and are being poured into Vietnam, helping to elevate the country's position on the global technology map. Professor Nguyen Mai, a leading expert on foreign investment, noted that the presence of major corporations such as Samsung has created a strong spillover effect, attracting more high-tech investors and forming increasingly tight value chains in Vietnam. Despite these encouraging results, the capabilities of domestic enterprises in the industry remain limited. Product quality and design have yet to meet the high standards of international markets. Moreover, several domestic electronic brands that were once prominent have slowed down or lost market share as the consumer electronics sector continues to be dominated by foreign brands. Notably, most of Vietnam's export value still comes from FDI enterprises such as Samsung, Intel, LG, Canon, and Foxconn. Meanwhile, local firms struggle to deeply integrate into global supply chains due to constraints in technology, capital, and product design capacity. Supporting industries, which are a key factor for improving localization rates, have yet to develop commensurately. Currently, the localization rate in the electronics sector is only around 30 to 35%, significantly lower than that of Thailand or Malaysia. Section 2. Advantages from government policies. According to the Ministry of Planning and Investment, as of the end of 2024, Vietnam had more than 38,000 valid foreign direct investment (FDI) projects with total registered capital exceeding 460 billion USD. The high-tech and electronics sectors account for a significant portion of this amount, featuring major projects from global giants such as Samsung, Intel, LG Display, Foxconn, and Amkor Technology. For the first time in 3 decades of attracting FDI, the Politburo has issued Resolution No. 50 NQTW 2019, setting out guidelines to improve institutional frameworks and policies to enhance the quality and efficiency of foreign investment cooperation through 2030. Vietnam is targeting double-digit economic growth during the 2026 to 2030 period, with high-tech FDI expected to serve as one of the country's key growth drivers. Specifically, Resolution No. 50 NQTW of the Political Bureau sets clear objectives. The proportion of enterprises applying advanced technologies, modern management practices, and environmentally sustainable operations with a focus on high-tech industries is expected to increase by 50% by 2025 and 100% by 2030 compared with 2018. The localization rate is projected to rise from the current 20 to 25% to 30% by 2025 and 40% by 2030. Meanwhile, the share of trained workers in the labor force is targeted to grow from 56% in 2017 to 70% by 2025 and 80% by 2030. However, experts also warn that to attract more strategic FDI projects, Vietnam needs to continue to strongly improve its investment environment. This includes three issues. First, upgrading secondary technical infrastructures and logistics. Second, developing high-quality human resources. And third, reforming investment incentive policies, especially for new fields such as semiconductors, artificial intelligence, and clean energy. Section 3. Institutional impacts. Incentive policies and strong FDI capital flows have created a vibrant, high-tech ecosystem in Vietnam. Vietnam is accelerating institutional reforms to free up resources for innovation. The 2025 Innovation and Private Investment Report, developed by the National Innovation Center and Dow Ventures (BCG), along with strong commitments from investment funds, technology enterprises, and international partners through the signing of investment cooperation agreements, are proof of the potential and opportunities of the Vietnamese market. The presence of large corporations such as Samsung and Intel not only brings capital, but also attracts hundreds of satellite enterprises, creating hundreds and thousands of jobs and improving the technical level of Vietnamese workers. However, over-reliance on the FDI sector is also a challenge. Vietnamese enterprises still mainly participate in the processing stage with low added value, while the stages of design, research, and product development are still controlled by foreign entities. Policy experts say high technology, especially strategic areas, has strong spillover effects. Attracting people first to learn, cooperate, and develop internal capacity is a long-term direction, helping Vietnam not only become a production site but also a regional innovation center. Section 4. Solutions for investment development. To make the most of opportunities from the new wave of investment, Vietnam needs to focus on three main solutions. First, developing domestic supporting industries. The government needs to continue supporting small and medium enterprises in technology transfer and developing the production of electronics components and accessories. The formation of supporting industrial clusters in Bac Ninh, Thái Nguyên, Ho Chi Minh City will help increase supply chain connectivity. Second, investing in high-quality human resources. Training engineers in electronics, automation, microchips, and R&D engineers is a key factor. Joint programs between enterprises, universities, research institutes need to be expanded, helping workers meet the requirements of high-tech investors. Third, transition from processing to creation. Vietnamese enterprises need to proactively invest in research, product design, and their own brands. The government can support innovation funds and tax incentives for enterprises investing in R&D. The government is committed to always being ready to act, accompany, and create the most favorable conditions for all parties involved in promoting innovation.